Detroit Homecoming has been made possible in part by Urban Science, guiding business through science. Make decisions by what you know, not what you think. And by the William Davidson Foundation, advancing the cultural, economic, and civic vitality of Southeast Michigan, the State of Israel, and the Jewish community.
Finally, we have Matt Temkin, a managing member of North Coast Partners and the Detroit Opportunity Fund, doing development in West Village, East Village, and he'll talk a little bit about his Opportunity Fund plans. Matt?
Hey guys, so nice to be here. We put our company together about 5 years ago to start investing in multifamily properties, mostly in the villages. And we've been syndicating those investments for high net worth folks, mostly in the coasts. And in January, I read about some new legislation that had been enacted that pretty much just like described our business and then also added some tax advantages to it. So I freaked out and I called the think tank behind the legislation and I said, you know, this is going to save the republic. And I really think that it is. You know, I think that economic inequality, particularly geographic economic inequality, is outside of climate change probably like the biggest challenge that we're all facing. And I think this huge republic, we have these concentrations of capital, and somehow we need to spread it across the country. And that's what we've been doing. So like, I used to work at a law firm, and you know, when the partners would ask me, hey, what are you doing now? I would say like, well, you know, like we're just kind of syndicating these investments in low-income communities for high net worth folks from richer areas of the country. And now when they ask me, it's like, well, we're running an opportunity fund. So I think that like I don't have big developments to announce. I think I can announce a little bit about the program. And like what we're going to do is we're raising a fund that will bring equity to different development projects here in the city. On some of those projects, we'll be the developer, and on some of those projects, we're just going to be providing capital to the developer. But the tax advantages of this kind of investment are really unprecedented, and I'll do my best to explain them. It's like really complicated, but also really simple at the same time. In the packet of information that you have is a memo that we put together that explains it. So whatever I miss or fail to explain correctly, you know, you can look through that and learn about it after. So, how do I? Brand new way to invest in Detroit. Opportunity funds. So the governors of each of the 50 states were able to designate up to the 25% of the low-income population census tracts in their states as opportunity zones. And I didn't know what a population census tract was, but now I do. It is sort of the census's way of describing a neighborhood. It's something bigger than a block, smaller than a city. In the area, in the villages where we've been investing, in that zip code, for example, there's like 11 of them. So the designation, so the governor's nominated, Treasury certified, the national map is done. This is part of the Detroit map, and you know, it's only low-income areas, but in a lot of places, those are really great areas. Like, I mean, this is downtown. I mean, you guys are sitting in an opportunity zone right now, you know. And then the areas on the east side where we've been doing everything, those are all in the zone. So Detroit, first of all, like designated correctly. They designated areas that weren't farmland in the middle of nowhere. They designated areas that had already seen some public and private investment. And then this is kind of just an extra incentive and an extra framework for people to be able to make these investments. So this is how the thing works. Some of you are probably familiar with how a 1031 works. You know, you can roll capital gains from one sale into a new thing. This is kind of like that, except you can take a capital gain from the sale of any kind of asset, like stocks, art, whatever, real estate, you name it. You sell the asset, and you roll the gains into an opportunity fund. And you defer and eliminate taxes in the process. There's three primary benefits. There's a deferral, there's a step up, and then there's an elimination. So I'll give an example. So say you've got $1 million worth of Apple stock gains. You sell those, you get liquid. You've got 180 days to take those $1 million and put them into an opportunity fund. If you do that, you don't pay taxes on those gains until 2026. So right now, you've got an 8-year deferral, which because of the time value of money is a really powerful thing. If you get it in by the end of next year, when the tax bill comes due in 2026, your basis is going to be stepped up 15%. So when the tax bill would come, you would only pay it on $850,000. If you miss next year, but you get it in by the end of 2021, you'll get a 10% step up in 2026 when it comes due. So you got the deferral, you got the step up, and that's great. You do have a tax bill in 2026, so you are going to pay taxes. But it's big. This is like designed to like unlock capital, you know, and get people to invest. But those are the appetizer. The main course is the $1 million that you roll into the opportunity fund. If you hold that investment in the fund for 10 years, and then we wind down the fund in year 11, and your $1 million is now worth $5 million, the $4 million is all tax-free. Tax-free. It's federally tax-free, and then like states are also coupling to this. I mean, it's really, really big. You know, the question is sort of like, you know, you got to put the framework together to like do all of the work on this and everything, but there's an estimated $6.1 trillion worth of unrealized capital gains out there at the end of 2017. And unless you're talking about like fighting a 10-year war, that's like, you know, that's enough money to do a lot. You know, compared to like the new markets tax credits or something where you've got $3.5 billion annually in total incentives, this is something where you've got, it's sort of unlimited basically. Anyway, you know, a lot of people are really interested in like investing here, and like unless you ran into us at a party or you knew Dietrich or Peter or, you know, like what would you do if you're reading the New York Times and you're thinking, oh man, this is cool, I want to like get involved, I want to bring my capital to the city. You know, you wouldn't really like know what to do. Now you can look for an opportunity fund and you can say, okay, cool, maybe I'll sell that stock, maybe I'll get invested, and you can actually like find the people who are going to do the work for you. Anyway, I mean, that's the program. You know, we're putting together a fund, like I said, we're going to like partner up with developers here, we're going to do some of the development ourselves. I don't have like a big development to announce, but I can break some news to people here if you want some news broken, and that's that Jed Halbert is part of the team. People seem to like him. He's a great guy. Anyway, my time is up. Any questions you have, I could talk about this if my hair was on fire. So I look forward to talking to everyone.
Okay, so now we just heard from a few speakers, and if we have questions for any of those speakers, I hope the speakers are lined up here. We've got mics on the floor. I have a question on the Opportunity Fund for Mark and for Matt. I didn't know that all the rules and regulations were already established so that you, I mean, Mark, you said that you had the first project that was done with this fund that just got passed in the tax legislation. How did you do that? I thought the regulations were still...
Sure.
Well, both of you.
Sure. So the Opportunity Zone industry now is sort of like building the airplane in flight. And what happened in March, IRS said you could self-certify a fund. We are about to start our raise. We talked to all the experts. We put in the minimum requirements and disclosures, and we were comfortable in raising on that basis. Some of the complexity associated with multi-property funds and other things are not yet in place, but we were comfortable enough to raise the funds based on the detail of the statute today.
Okay. All right. Any other questions from the floor? We've got some roving mics out there. Okay. No other questions? They came all the way up here? No. Okay, that one. Right there.
That the Opportunity Fund qualifies as a 10.
The mic is off. We can't hear. Okay, try it again.
Hello?
No, it's not. Oh, now
I
it
think,
is.
okay.
Okay, got it. Yeah.
Morse code. Does you're saying that the Opportunity Fund qualifies as a 1031 vehicle?
No, it has some similarities to 1031, and maybe my colleague can address that.
He mentioned that it's
That's sort of the genre, but it's much broader. It's not tied just to real estate proceeds. Any transaction which create capital gains, sale of a business, artwork, bitcoins, anything can generate capital gains.
But 1031 has certain requirements. You have to designate it. You've got to fund it. There's time.
None of those rules apply. Well, there are time requirements in terms of there's a 6-month requirement when you create the gain until you actually close on the transaction, but it's much more flexible than 1031.
Thanks.
Matt, do you have anything to add to that?
Sure, yeah. I mean, it's like your job is just to sell the asset, and then you've got to commit it to the Opportunity Fund. The Opportunity Fund has to hold 90% of its assets in qualified opportunity zone property and is audited and all of that, but you just got to get it into the fund. The fund's job is to make sure that it is holding its property correctly. Pardon?
Repeat the question. Just repeat the question.
Correct. You just got to get it into the fund. That's it. You don't have to have a specific project. The fund will have probably different projects at any given point in time because the fund is going to have to turn your cash within a certain time window as well into qualified opportunity zone property.
Hi, sorry I had to step out for a call, and I'm just curious, what is the net targeted returns for your opportunity fund?
Sure. I mean, on the deals that we've been doing in Detroit so far, we've been targeting like a mid-teens IRR, that's like the goal. Our estimates, kind of depending on when you get the investment into the fund, it seems like it adds anywhere between 30 and 60% to the investment. So if you were looking at a 15% IRR before, maybe now this is 18 to 21, depending. The time value of money really impacts it, the step up impacts it, and then the tax-free treatment on the back end impacts it. But we came up with that with our own modeling, and then the different accounting firms have kind of seemed to conclude that it adds 500 basis points more or less to the investment.
And then one last question. Once the fund acquires an asset...
Yeah, I'm sorry. I just wanted, if I could just follow up on that briefly. We found in the deal we closed here in Detroit that the opportunity zone incentive was not a gap filler that motivated the investment. It was icing on the cake. We don't think the market yet recognizes the differential in returns for opportunity zone because each individual has somewhat of a different requirement threshold and type of gain potentially. So it's still very early. So I'd be careful about pegging enhancements. But it definitely helps, no question. People invested more money than they would have.
Question, Tess, you got a question?
I was going to suggest that you present this opportunity fund to the big, not just the real estate investors, because I know several companies both on the West Coast and on the East Coast who they all went public, and I'm trying to find defined contribution funds to dump all these appreciated assets, and I'm sure there's many others that will be there tomorrow.
And it's not just real estate. You can invest in operating businesses.
No,
right?
I know.
This is a real estate crowd, right?
Yeah, this
Way
is a real
beyond
estate.
that.
That's why I'm saying,
Yeah.
I think if you present this opportunity fund, that the taxation makes it viable for the bigger crowd tomorrow, where we'll have tech investors, we'll have other people with appreciated assets looking for opportunities.
Thank you. Any other question from the floor? All right, thank you very much, guys. Thank you.